Hi, I'm Lynda Hafner, top producing realtor at ERAQ Realty in Central Massachusetts. Today we're going to talk about 13 answers to questions that I often get from first-time home buyers. Thanks for being here. Hopefully you had an opportunity to check out my other videos. Today we're going to talk about 13 questions that first-time home buyers ask. I'm going to answer all of these questions. I'm going to only answer them briefly because I'm actually probably going to do a more in-depth video of each particular question and go into more specifics because I just don't have time. I'm trying to get out a quick video, just give you some brief info. And then if you want more detailed information, please just subscribe and follow. And I'm going to go into more detail in next week and the week after. Each question I'll break down and give you a little bit more specifics. So first, the question I get from people a lot is, how do I know when I can buy a home? Now, as a realtor, that is not actually a question I can answer. I can give you some educated guesses. But the reality is, what I do when someone asks me that question is I give them contact information to very reputable lenders that I've worked with in the past and have them give them their financial information so that they can break it down and see if you qualify. Because you being able to afford a payment doesn't necessarily mean that a bank is going to give you a loan. So you really need to go through a pre-approval process. And whether or not you're able to buy a home is going to depend on your credit score, if how much money you have in the bank. You need a little bit, and it varies so greatly per person. So there's no rule of thumb. It depends on, a lender is going to look at your debt to income ratio. How much debt do you have to pay per month in relation to what you are getting paid per month? These are all questions that a lender is going to ask. They have to take all the factors into consideration when deciding whether or not you can qualify to buy a home. But there are a lot of great programs and great opportunities for first-time home buyers. So I totally recommend talking to maybe more than even one lender, maybe a couple different lenders. If you're not getting a recommendation from a realtor and you're doing this on your own, get a couple different opinions, because different banks have different programs, and one bank may not have a program that you could qualify with another bank. So that's the starting place. The second question I get a lot is, how much down payment am I gonna need? Now, a lot of buyers believe that you need 20% down. That is not true. Is it helpful to have 20% down? Yes, only because then you aren't stuck with an extra payment of private mortgage insurance. Private mortgage insurance, basically, they add this onto the mortgage payment. It's an extra payment that ensures the bank that if you default on the loan for any reason, that insurance will cover them and the money that they're loaning you. And what it means in terms for you and what you have to pay is that it's usually, I don't know how much it is, usually $100 or $150, depends on the loan amount, how much the private mortgage insurance will be. Again, these are all factors that vary greatly depending on how much of a house you get, how much of a loan you have, and all your personal financial details that a lender would be able to give you better advice than me, but I'm kind of just gonna give you a little bit of an overview. So if you have the private mortgage insurance, you can put down much less on a home, like 3.5% if it's an FHA loan, and an FHA loan allows you to have a lower credit score. And a conventional loan, you can do 3%, although the lower the down payment, sometimes the higher the interest rate. So these are all things you really need to weigh out for yourself. If what's most important to you, getting the house, no matter what the prices, or do you have to save that money and you don't want to buy a house until you can get the absolute best deal? These are things that, you know, you have to decide. When I was a first-time home buyer, I'm going to be totally honest with you, I'm not a saver. I just never have been. It's not a good thing, but I really, really wanted to buy a house, and I did. I bought a house. I ended up getting a gift letter from my dad. I had very, very little money. It all worked out. I'm glad I bought the house that I did, but it wasn't the ideal way to do it. I paid a little bit more, but I did get myself into a house as a first-time home buyer, and I loved it. I was happy, but that may not be the right answer for you. I mean, everyone needs to do what they're comfortable with. So yes, you can. The minimum you need would be 3 or 3.5% depending on your loan. Unless you go with a USDA loan, which is no down payment, but I'm gonna need to go in a little bit more detail with that. You can do it, but trying to get an offer accepted with no down payment is not going to be easy because sellers do not like no down payment. That means you have no skin in the game and they're less likely to allow you to purchase their home. So that's something you need to think about too. Yes, you can do it, but not easily, especially if you're in a seller's market and they have many other buyers who have a little bit more money to put down. That is something sellers take into consideration. So lots to think about. Next question. I'm sure you've seen all the ads. Oh, buy a house with no money down. Is it possible? Sure, it is possible if you qualify, if you are one of the few people who can qualify for a USDA loan, a VA loan. So what that means is a USDA loan, there are certain properties in certain rural areas that will qualify for no money down. And if you are a veteran, veterans have programs that will allow for no money down. But here is the clincher with the whole no money down thing, and I touched upon it briefly. And that is that yes, you can put no money down. One, it makes your monthly payment go up because you have nothing that you're putting down. And number two, a lot of sellers in a seller's market will not be as interested in accepting an offer from you. So it may take you several more times, and you may even actually have to pay a higher price on the home in order to get it in a seller's market if you have no money down. It's going to be a little bit more of a struggle. So I'm not going to say I would recommend it because I probably wouldn't. Even when you have a no money down situation, sellers want to see something. You know, they want like a deposit amount. They want a purchase and sale deposit amount. But what you can do is if you can give them that, a lot of times you can get a credit at closing. So if you're in a situation where you have to do it, and you really just want to go for it, then yes, it is possible. I just don't think it is probably the best option. So another question I get a lot from first-time home buyers is whether or not that, you know, their credit is good enough. Like if they have not the best credit, can they still purchase a home? So, and the rule of thumb that I like to give people is, you know, if you have, you know, really bad credit, then probably not. But if your credit doesn't have to be a 700 or 800 either in order to buy a home. So let's just go over a few guidelines. For a conventional loan, you need 620 or higher, okay, to get a conventional loan. And usually with a conventional loan, you have like a little bit better terms as far as less fees and things like that. But with FHA, you can qualify. Generally speaking, 580 it allows you to have a 3.5% down payment if you want to go with a lower down payment. But sometimes even with like 520 in that vicinity up to 580, you can still get a loan that, like, the bank would still allow you to get a loan, but you might have to put more money down. So again, this is where you really want to talk with a lender. They can give you the specifics based on your particular situation. When you're in a tough seller's market, having a conventional loan is definitely preferable. So if you can qualify for conventional, I would probably suggest that first. And then if you can't, FHA would be the next in line of preference. If you can qualify it and you can get you into a home, you know, that's a good thing. And then from there, I would get down to like the VA loan or a USDA loan. If you can't qualify for anything else and it's the only way you can get a house, then go for that. But another thing to seriously consider are some of the first-time home buyer special programs. There's a lot of them out there. Different lenders have different ones, and that can be really advantageous to you as a home buyer, as a first-time home buyer, that are not available to other home buyers. So be sure to check all your options. It does require a little bit of legwork on your part, but it's well worth it. What are the costs involved in buying a home? Well, obviously there's the deposit. And so say the bare minimum would be like 3%. So like on a $300,000 house, you're looking at about $9,000, 3.5% for FHA. So, you know, just do the math, whatever price home, do 3 to 3.5%. You will need that. We'll talk about the possibility of getting a gift letter for some of it if that is tight for you. There are, you know, and again, first-time home buyer programs may help you out of that situation. Again, all variable. One of the biggest expenses with buying a house is the closing costs. Now, the closing costs involve so many fees. It involves all the lender origination fees. I'm going to go into a lot more detail on this in another video and break down everything, but just know that closing costs, it covers everything. The lenders, the mortgage insurance, the homeowner's insurance, the attorneys, the title fees. There's a bunch of fees, and you just put them all together into closing cost fees. And those can be fairly significant. However, you can add that into the cost of the loan. For example, if you're gonna buy a $300,000 house and you anticipate that the closing costs are gonna be about $9,000 or $8,000 or $6,000, you just put in an offer for $308,000 or $309,000 and ask for the closing money back at closing so that you can use that cash to pay for your closing costs. So you don't need that cash up front. So that I do that for most of my buyers because it's a significant amount of money between the down payment and the closing costs. It's a lot of cash. Most people don't have that kind of cash. So that is one way around it. You will need the deposit money up front. So that's gonna be $1,000 with the offer, and then usually it's like 2 or 3% at the purchase and sale agreement, which comes 2 weeks later. So you want to account for that and have that money. And also you're gonna have to pay for the home inspection. That's about $500. Could be a little more if you do radon test and water tests. It could go all the way up to $800 depending. You know, FHA sometimes if you have a well, they require you to do a water test. So you're gonna need that money. Then you would also need to pay for an appraiser up front, usually another vicinity of $500 for the appraisal. These are all upfront costs that you would need. As a first-time home buyer though, again, you should be checking into any programs that offer discounts on closing, any discounts on money down. These are all things that are available only to first-time home buyers, so check into that resource. So I've kind of covered this already, but this question, like what are the benefits of a first-time home buyer? You have available a wide variety of programs, grants, discounts, all kinds of things that are available to you if you do your research, if you ask the right questions, and do a little bit of legwork to find out the best possible loan program that will work with your budget and your particular financial picture. So check it out. When's the best time to buy a house? Well, first, it's when you can afford it, obviously. But secondly, really the best time when you're gonna get the most house for your money is when the interest rates are low. The lower the interest rates are, the more home that you can afford. Your money goes further. So ideally, when the interest rates are low, that is the best time to buy. But other than that, worst case scenario, if the interest rates go up, you purchase a home and you refinance. down the road when they go back down. I mean, home ownership is a wonderful gift, and I don't want the high interest rates necessarily to discourage you from buying if you want to be a homeowner, but the best time is when they're low, I would say. This one's a little bit tricky. Can you get a loan from your parents? Technically, no, you cannot. It has to be in the form of a gift, but you can receive money from your parents as long as the bank can source that money and make sure that it's not part of the debt that you owe, because from the bank standpoint, they don't want to have you have too much debt so that you can't have the ability to pay them back. So it has to be a gift letter accompanied with the gift. I know when I bought my first house, I did this. I asked for a gift letter from my dad. I did end up paying him back anyway, but for the bank's purposes, I needed to say that it was a gift, but that's up to you. As a first-time home buyer, you may not have a lot of experience with different banks and mortgage companies and credit unions, and it can be very confusing and overwhelming. So my suggestion is to talk to more than one if you're doing this on your own, if you haven't contacted a realtor yet. But if you do have a realtor that you're contacting, they can give you an absolutely trustworthy reference to someone who will walk you through the process, get you a pre-approval letter, and make the offer all the way to closing a smooth process. And that's really what you want as a first-time home buyer. So I would definitely rely on a realtor if you can, and if not, you're gonna have to probably just interview several, find out which ones offer the best program for your particular needs. I talked to you a little bit before about PMI. What is PMI? It's private mortgage insurance. Do you have to have private mortgage insurance? No, you don't if you have 20% down, but I don't know a lot of first-time home buyers that do have 20% down. So usually the first-time home buyers that I always work with end up paying the PMI. It ends up being worth it for a couple of different reasons. One, if it's a conventional loan, when you do get to that 20% investment of your funds into your home, then the PMI will stop, whatever that monthly fee is, and it ranges somewhere. It's usually in the vicinity of around 150, but it varies depending on the loan, depending on how much money you put down. There's a lot of different factors. So that's one thing. But with FHA, it's a little bit different. Those loans actually attach, the PMI stays with the loan the whole life of the loan. So that's something you want to be aware of before you commit yourself to whatever loan it is you are doing, because the only way to get out of paying the PMI on an FHA is to refinance. But that could be a possibility too. At a certain point when you've reached that 20% investment of your own money into the investment of your home, if you want to refinance, you could do that. So a couple different options. So private mortgage insurance basically guarantees the bank that if you default on their loan, that they're giving you all this money, that the mortgage insurance is just an added so that they don't have to lose all that money. It just gives them a guarantee that when they loan you the money, they're not going to lose their shirt. That's the short of it. How do you get started with this whole process of buying a home? And like I said earlier, the number one thing you want to do is figure out your financial picture. Go talk to a lender, have them figure out between your credit and your income and your debt to income ratio, how many bills you have on a monthly basis. These all have to be put together in the picture. Talk to the lender. The lender will give you the amount that you can afford, what the monthly payment is that you're going to have. And then once you have a picture of what that looks like and you know what you can do, you reach out to a realtor and you start looking at homes and the process begins. So this lending process is pretty complex. I did a very brief overview. I am going to, in my next video, I'm going to go through each one of these questions into a little bit more detail and break it down so it's a little easier to understand. So I hope you will subscribe and check out the future videos that I will have that will give you plenty of information so you can go buy your first house. Have a great day.